Morning, guys. It's Thursday, October 30th, 5:23 a.m. Central Time. Grain markets are lower to sharply lower this morning. December corn futures down 5 1/4 at 428 3/4. January soybeans down 19 cents at 1075 1/2. December Chicago wheat down 9 1/4 at 523. December Kansas City wheat down 10.5 cents at 512 1/4. December spring wheat down 5 at 555 1/2. We've got some Trump Xi news. Their meeting wrapped up very early this morning. Let's start there.
So, President Trump and Chinese President Xi Jinping have agreed to a 1-year trade truce. Trump said that he had an amazing meeting with Xi and ranked the talks 12 out of 10. Trump said tariffs on Chinese imports would be cut from 57% to 47% by reducing the rates of tariffs related to fentanyl drugs by 10%. China's Commerce Ministry added that the two countries reached a consensus on fentanyl cooperation and also agricultural trade.
Trump had a very lengthy post on Truth Social following the meeting. I cut out and just posted the portion related to agriculture here. He said, I was extremely honored by the fact that President Xi authorized China to begin the purchase of massive amounts of soybeans, sorghum, and other farm products. Our farmers will be very happy. In fact, as I said once before during my first administration, farmers should immediately go out and buy more land and larger tractors. I would like to thank President Xi for this. This is a little over the top because you can't call this a trade deal. It's not a trade deal. It's a trade truce. And there's still all sorts of tariffs on either side. China's Commerce Ministry did affirm the details of the deal as Trump described it with regard to soybean purchases, cooperation on fentanyl and rare earth export controls, but there were no details. So I think what the trade wanted here was like they wanted China to say, we're going to buy 15 million metric tons of beans during the next 4 months, or we want to see X billions of dollars benchmarked to soybean purchases. And you didn't see anything like that. We're just seeing China say, hey, yeah, we'll agree to that. But there's no details here. There was one analyst cited in the Bloomberg piece this morning, and I really like this description. They called this subscription diplomacy. First, it was 3 months. Now it's 12 months. Here's the direct quote. Once the world's great powers signed treaties meant to endure. Diplomats spoke of alliances in the language of permanence and partnership. Now they talk in billing cycles, short-term contracts, negotiations, and renewals to seek a better deal. And that's what this is. It's subscription diplomacy. It's like we're just going to do this thing 3 or 4 months at a time, and it leaves the trade and the market and just the general world kind of uncertain. You look at how the markets across the board reacted this morning. Soybean market doesn't like it. Corn market doesn't like it. The stock market is marginally lower. Maybe if there was a full-blown trade deal, like something more similar to phase one, you'd see some much more positive action. So for the moment, it's underwhelming is what it is.
Soybean futures held mostly steady on Wednesday following reports that China's state-owned COFCO purchased 3 cargoes of U.S. beans. The news provided little support to the market, with the January 26 soybean contract slipping about 1 cent to settle near $10.95 per bushel. Analysts noted that China would need to either step up its buying or commit to substantial future purchases to spark optimism in the market. Now that a trade truce has been reached, traders and analysts remain uncertain whether China will follow through on any purchase commitments.
So classic buy the rumor, sell the fact situation as it stands this morning. The market, of course, could look much different later in the day today. But the market rallied into the meeting, I think partially because China did buy 2 or 3, I think 3 soybean cargoes is what was reported. And I believe that to be true. But now we need to, show us the money. We need to see more. We need to see what we can hang our hats on and say, hey, China bought X million metric tons, because for now they've bought basically nothing. So the market's peeled back. I wouldn't say it's a disastrous looking chart by any means. Maybe you go back and fill that chart gap that was left earlier this week. You look at the weekly chart, and I've shown you guys this every day this week because I think it's important. You'd really like to see the nearby November contract close above 1081 this week. That would look very good, just from a technical standpoint, if you could break out of this multi-year range. And we did, not multi-year, but 15-month range. And we did break out of it temporarily, but we weren't able to hold it. And you'd really like to see this thing hold the trade above 1081.
Following a Wednesday video conference between U.S. Ag Secretary Brooke Rollins and Mexico's Ag Minister, it was determined that the U.S.-Mexico border will remain closed to Mexican feeder cattle imports. Although progress has been made in containing the New World Screwworm outbreak, no timeline was set for reopening the border, which has been closed since May. To assist with eradication efforts, the U.S. has invested $21 million in the construction of a new sterile fly facility in southern Mexico. Of course, the announcement contributed to Wednesday's rally in the cattle futures.
Okay, so cattle did bounce yesterday. Live cattle were up, what, $3 to $5? Feeder cattle were up like 8 or 9, but that was after a massive multi-day sell-off. How much of the rally can be attributed to this headline?
Oh, golly, that's a good question. Maybe half. I don't know. As you said, there was a massive sell-off, so
Yeah.
we were due for a bit of a balance. This is a very bullish headline because everyone in the industry was incredibly concerned. I guess we'll just see how the markets play out today.
Yeah, the sell-off, I think, was the result of the Screwworm headline that was out previously, like last week. They were talking maybe reopening, and then you had Trump talking about imports from Argentina and from Brazil was potentially out there. Maybe none of that stuff happens. I don't know.
Yeah, who knows? I mean, that's just with time, and God knows what Trump will say to send the market one way or another here in the near future.
Yeah.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
Absolutely fantastic stuff from Brian Split yesterday. He covered, started off with soybeans, which have been probably the most interesting thing that we've seen here. Although we've got a lot of movement in a lot of markets. Soybeans are moving, corn's moving, livestock are moving. Interesting stuff, and chasing the headlines around can be tiresome sometimes. And with the charts, Brian doesn't really do a whole lot of fundamental or news type talk. It's more like, hey, this is what the technicals are telling us. And he's very, very good at explaining it. You guys got to tune in and check that deal out. Shay was on earlier this week, talked about 2026 corn marketing. Shay is one of our regular contributors, and he is a notorious aggressive forward marketer and kind of talked about his game plan. He also talked about grain marketing and government payments and how the two should be tied together. Paul Neiffer is going to be on today. He's going to talk a little bit about crop insurance, and he's going to tell us what he knows about a forthcoming or perhaps lack thereof farm direct payment, the one that was discussed just here in the last couple of weeks. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation, nobody to try to sell you anything else. I know you guys are busy. You can sign up on your phone. It takes about 30 seconds. All of the information that we send out is sent via email and text, and it can all be accessed on your phone very, very easily. One click to play, no messy login instructions or anything like that. Give that deal a shot this morning, guys.
U.S. ethanol production declined last week. Weekly output fell to 1.09 million barrels per day, down 1.9% compared to the prior week, but up 1% versus the same week last year. Ethanol stocks rose to 22.37 million barrels. The print was up 2% compared to the previous week and up 1% compared to the same week last year. According to Reuters data, U.S. ethanol margins remain strong.
Very good. Margins are positive to the tune of like 10 to 40 or 50 cents per gallon, depending on the location. And that's using spot prices, of course, of corn and ethanol and DDGs and inputs. This is a fantastic print, second best seasonal print on record, behind what was that, 2021, I guess. Ethanol stocks are moving in the right direction. I'd like to see them a little bit lower, but this is all good. And some processors have been having to bid up to buy corn because the farmer has been a pretty tight holder. Although I think that there was some farmer selling the last couple of days, given the little rally.
According to Rabobank, the season's Brazilian soybean crush is estimated at 60 million metric tons, an all-time high and up 3.4% from last season. Soybean acreage is estimated to increase by 2% versus last season, while production is slated to rise 3%. Exports are projected to remain unchanged at 111 million metric tons. Rabobank also forecasts a 2.2% increase in Brazilian corn acreage, though corn production is expected to decline by 3.5%.
USDA is projecting record usage or demand of Brazilian soybeans. Exports expected to be a record, and domestic crush also expected to be a record. So this all hinges, of course, on the Brazilian crop, which is being planted. There appears to be no major weather issue. They were dry for a little bit, but they kind of transition out of the dry season into the wetter season around this time of year. So no major crop problems to speak of right now.
The Federal Reserve cut interest rates for the second time this year on Wednesday. The benchmark rate was reduced by 0.25 percentage point to a range of 3.75 to 4%, the lowest level in 3 years. Fed Chair Jerome Powell, however, cautioned against assuming another rate cut at the December meeting. He stated that there is a growing consensus among policymakers to assess the impact of recent cuts before taking further action. Traders are now projecting a 67% chance of a rate cut in December, down from 90% earlier this week. The Fed continues to operate with limited economic data amid the ongoing government shutdown.
There were two dissents. One Fed member wanted to cut by a half, and one didn't want to cut at all. The Fed fund rate, effectively now target rate of 3.875%, is the lowest since November of 2022. And that's despite the fact that your inflation numbers remain elevated. Powell talked about the job market, and he actually said, like, we're worried about the job market, but the data isn't really indicating that it's slowed a whole hell of a lot. Jim Urio is going to be on in our premium stuff to do Macro Friday tomorrow, and I'm sure we will touch on the job numbers and the Fed and all of that. Let's do a quick cattle summary from yesterday.
Cattle futures bounced back. Live cattle were 390 to 587 higher. Feeders saw gains ranging from 377 up to 942. Box beef prices were also higher. Choice was up 173 at 381.38, and Select was up 179 at 361.79.
Outside markets, again, kind of underwhelmed by the Trump G meeting and the result. The S&P's down 9 points, which is really nothing, but no big rally or anything. The Dow's down 130. We've got treasuries off just a little bit. U.S. dollars about flat. Crude oil is down 34 cents at 60.14 in the December WTI. Have a great day, guys. We'll be back on Friday.